How you doing, boys and girls? It's Trader Deriv. So as of this week, I have actually launched my VIX 75 and VIX 25 private signals, right? So if you don't know what VIX 75 and VIX 25 is, it's actually volatility indices, and that is actually a synthetic market created and hosted by Deriv, right? So it's not accessible to everyone or to different countries, mostly Africa, Asia, and I think certain European countries, right? So USA can't use it, Canada can't use it. So in case you're from any of those countries, just don't bother, you can use it. Now, just make sure you look up if a country can utilize Deriv synthetic before reaching out to me. But regardless, the very first thing which you need to know before you trade any markets, whether it is crypto, forex, synthetic, futures, indices, anything, is the risk management. You need to know how to calculate your risks and ensure the safety of your capital. So that is what this video is about. Now let's hop into it, right? So right here is the group, and there will be two type of participants, right? There will be the monthly subscription and the lifetime membership, right? So reach out to me for the cost. Okay, let me just put it out. It's $50 for the monthly subscription and $500 for the lifetime membership. So reach out to me to make your payments. Now back into risk management, right? Here it is. All right, so it's quite simple to calculate your risk, right? So let's just go over it. The very first thing you want to do is you want to know the area of which your stop loss will be, right? So simply, if it's a zone that's been given, you just want to know what that area is. You have a couple of tools of measuring it on TradingView, right? This is it. So just look at the first one, right? Being this one, being 1056 or 1056, right? That's the stop loss. So remember, if you want to access this Deriv chart, just come on your Chrome browser and then type this in the browser. You get to access this. You can't see it from from TradingView app or website. You have to use this very link for you to access it, guys. Okay, with that said, we now have so we can see it's 1018, right? We can also use the charts tool being and look at what the stop loss is. Look at the first one, don't look at the second one. The second one, don't worry about it, just use the first one. So this value is what we'll be considering as our stop loss throughout this video, right? So just keep that either on the notepad or just cram the number 1018, right? 1018. Now there are a couple of things that are very important when coming to the synthetic markets, right? Mostly on VIX 75 and VIX 25. So for VIX, I only trade VIX 75 and VIX 25. I don't trade anything else. So for VIX 75, the lowest lot size is 0.001, and for VIX 25, the lowest lot size is 0.5. So also keep these numbers, right? So we have two numbers we're keeping. The first is the stop loss of this particular trade being 1018, and then the lowest lot size for VIX 75 being 0.01, and lowest lot size is 0.5 for VIX 25. Right. So you don't really need to cram this on your MT4, MT5. If you try and take a trade lower than this, you'll just see an error. You just bring it up, or you can always search it up or write it down somewhere until you get used to it. Now for you to calculate your risk, this is the step, right? So it's just a short step, right, guys? So I think I'll provide a link to it so you can just save it, and in the beginning days you will just be using it until you get used to it that you can do it offhand. So I'll put this in a Google Drive and have you guys have access to it, right? So the very first thing you want to do is get the minimum risk, right? So minimum risk is simply your minimum lot size multiplied by a stop loss, right? So if you recall, what was our minimum risk in Deriv, right? I stated it's just up here. This is our minimum risk for V75. Your minimum lot size is 0.001, right? This is the minimum lot size for V75. And what is our stop loss, right? Our stop loss is what we started out this video with, being 1018, right? 1018 or 1018. So if we want to go about calculating the minimum risk, right, in dollars, all we need to do is to say, right, to say minimum risk, right, is equals to what is our minimum lot size? We know our minimum lot size is 0.001 multiplied by what is our stop loss, 1018, right? So this will give us a value of thereabouts. Okay, so this is the value 1.0118, right? So let's just come back here. So the answer is 1.018, right? Simply, that's our minimum risk, right? Now we want to get the risk multiplier. So simply the risk multiplier, we'll be using it to calculate our actual risk, right? So it's actually 3 steps. The reason I gave you the fourth one is for confirmation, right? To confirm that this whole thing you did was correct, right? So step 1 is completed. We know our minimum risk in dollars is actually just $1.108. So what that means is, if we were to just take this trade using minimum lot size as well as using the stop loss, if we were to hit the stop loss on this trade, peradventure price was to just go do this, right, we would be losing $1.018, right, on this trade. That's just all the minimum risk means. But now we want to get an actual risk. So different people have different account sizes, right? So let's say you have a $200 account, right? A $200 account balance. You have a $200 account balance and you want to risk 5% per trade, right? And you want to risk 5% risk per trade. So first off, you want to confirm 5% is equals to what in dollars, right? That is $10 per trade. So you want to ensure that whenever you take a trade, right, you don't want to lose $1.108. You want to lose $10, right? So as you can see, this is lesser. 1.108 is lesser than $10. How can we get up to this value? We need a multiplier to multiply this value up to the equivalent of $10, right? So that's why I said get the risk multiplier. So all we're looking for is the risk multiplier. So now our fixed risk divided by our minimum risk will give us the risk multiplier. So let's just get that. So simply is fixed risk. So we say risk multiplier is equals to fixed risk divided by minimum as you can see, all these two values are both in dollars, right? So at the end of the day, once they get the once two signs which are the same from mathematics get divided, they'll lose their sign. So risk multiplier doesn't have the sign because both of them are in dollars. You get that. And what is our fixed risk? Let's just take this over here. As we can see, our fixed risk is $10 because that's what we only want to be losing on this $200 account, right? Always. So we have let's just write that correctly. $10 divided by our minimum risk. What's our minimum risk? According to this area, we got to find out that our minimum risk is is $1.08, right? So we just put $1.08, right? So with this, if we check, right, if we do the maths, we get to see that we would be having about 9.46, right, give or take. So 9.46 is what we'll be having for step 2 is completed. 9.46, right? Now for step 3, to get the actual risk, right, we want to know how much we are actually risking. So for us to know the actual amount we are risking, we want to know the actual lot size we're using, guys. So for actual lot size, it's very, very simple, right? So just say actual lot size is equals to our risk multiplier. If you recall, our risk multiplier is 9.46, right? We could use 9.467 to the power of 3, right? 3 decimal places, then we end it there, multiplied by our minimum lot size. So what is our minimum lot size? Our minimum lot size is, if you recall, 0.001. So we just say multiply by our minimum lot size, 0.001. Right, so that will give us, if we do the maths, that would be 0.009 lot size. Very easy, right? So this is the actual lot size we'll be using on this trade to ensure that we only get to lose $10 on our stop loss of, well, if you recall our stop loss, right? Our stop loss is 1018 pips, right? So our stop loss is 1018 pips. So we can just add this so that we know it's pips, right? 1018 pips, right? So for the confirmation, just to confirm that this is actually going to lose 1018 pips, how do we do it? We say actual lot size multiplied by our stop loss. So let's see if our actual risk in dollars, right? Actual risk in dollars is correct. So you can do this for a while. Once you get used to the process of doing it, you don't need to like check. You don't need to do the confirmation. You can just use the 3 steps, and you can also use your calculator. Just do it so quickly and place your trade, right? So just practice it on a demo for a while, and then I think if you just practice it 5 times, you'll be able to do it. Don't stress it. I'm just giving you guys the maths to it. Okay, no stress. The actual lot size is 0.009 multiplied by stop loss being 1.18. If we go use the calculator to check this, right, let's just get the calculator here. All right, so we have 0.009 multiplied by 1018, right? You guys see approximately $9.16. So with that, we're risking approximately $10, right? So with that, we're good. That's just it. So that is about $10 approximately. So you're fine. So that is just how you get to ensure you risk the correct amount in dollars on VIX, right? Just this, guys, just this. Let me download this, and that's it. Voila. So for those of you in the signals, when you get to see me drop a signal, right, that is all you want to do. Just use this and you'll be fine. Okay, let's end the video.